Hey, it's Larry Gonzalez with your housing market update for the first full week of February. It was a very interesting week. We had Jobs Week this week, a lot of news coming out. We had Honolulu Board of Realtors, housing report for January. Let's get into it. Prices are up. We'll go over that. Inventory up as well. And rates are kind of sideways this week. I thought we might get a bit of a bump down or push down, but it didn't really happen. It's kind of sideways this week. Let's talk about the headline news. Jobs Week, mixed bag of news on really all of the reports. Kind of like the little roller coaster, and we saw that with the rates. Honolulu housing market is strong, but there is some underlying issues that will make this, I think, a very good market for buyers. And then, has President Trump figured it out? We'll get into that. I think he's focusing on some of the right things, and we'll see how it goes. And then initial jobless claims were up after a week where they were down. So again, that roller coaster continued. All right, let's get into the ADP employment report. It came out on Wednesday, but on Tuesday, we got the JOLTS, the Job Opening Labor Turnover Survey, and that actually dropped from the mid 8 millions down to 7.6 million. That was a much bigger drop than expected. The expectation was right around 8 million. Then we got the ADP, so rates kind of started to go down a little bit on Tuesday. And then the ADP jobs report came in. Guess what? It actually showed a higher growth in private sector jobs. It was expected to be about 150,000. It was actually 183,000. If you look, you can see the numbers had been going down for about 3 months. Well, it went up in January, and there were increases across all companies at different sizes. And then the other thing, it was wage growth. Wage growth for job stayers was up, but for people who were changing jobs was down slightly. Not a big change, but still a change nonetheless. Most of the hiring in large and medium companies, smaller companies, not as much, but still positive across the board. On Friday, we had the BLS, the Bureau of Labor and Statistics jobs report, and talk about 180 out job growth. All right, and the business survey fell short of expectations, down at 143,000, but there was 100,000 positive revision for November and December, so those kind of offset each other. Then you saw unemployment rate drop, and this is off the household survey. The unemployment rate dropped from 4.1% down to 4.0%. So that's 2 months in a row where the unemployment rate dropped. That is definitely not good news for mortgage-backed securities. And in the 10-year treasury, you see those numbers going up, but not a whole lot, but still. And then you see average weekly earnings was up from 3.7 last month to 3.8% in January. Really, the BLS jobs report, mixed bag of numbers, and you saw that in interest rates not really dropping and going up a little bit, but not too much. Now let's get into the Honolulu Board of Realtors, the January housing market update. There's a lot of momentum going into 2025, folks. Positivity, people saying, you know what, I got to sell my home now, and we saw that. All right, median sales price is up year over year at 1.12 million. We're pretty steady in that range. Even median sales price for condos at 539,500. It was 540,000 last month, a new record. But still, very, very good overall. Just shows the strength of the housing market in Honolulu County. Let's look at the monthly indicators. You got closed sales down 14% for single family homes, down 3.4% for condos. That is pretty normal drop. We'll kind of get into those numbers, show you some graphs. Median days on market, though, spike. Look at that. 25 days for single family homes, up from 20, and 39 days up from 36. We're getting into the 40s, folks, for condos. Huge spike in new listings, more so than what we normally see. And then a month, a supply of single-family homes and condos both spiked, up 3.1% for single-family homes, and then condos up to 5.6 months of supply. All right, let's get into median days on market. You can see this. We have had a continued rise overall in median days on market for both single family and condos since September, October of 2024. That is when the rates dropped, all right, a lot, and they started to go up after that, and you can see days on market starting to stay. And they typically go up at the end of the year, but this is a pretty big spike. And 39 days on market is the largest in 3 years for condos. This is kind of indicative of what we see typically at the end of the year, plus the overall higher interest rate environment that we have seen really since September, October, when rates really started to go up. Let's look at new listings. Huge increase in new listings, people. Highest number of new listings for condos since February at 22. And again, normal, if you look at 24, January 24, January 23, you see that new listings, they go up. But have you seen a spike like this? Woo, that is a big spike going from December to January. So will we see them fall, the new number of new listings fall in February? I don't know, but that's something to keep an eye on. All right, active inventory, highest level of inventory since before COVID. All right, look at those numbers. You can see we're being led by condos, which have spiked, above now 2,000 condos on the market. And again, we all know why this is happening. Higher maintenance fees, insurance fees, those are really hurting people. And typically your condos are in the more affordable range, but those higher maintenance fees, the higher hurricane insurance fees, which are, again, paid through the association, those are really causing condo inventory to remain stagnant. And you're starting to see some condo prices come down. And to me, this bodes very well for buyers because, the question now is, will HOA maintenance fees continue their meteoric rise, or will they start to come down? Talk to or listen to a homeowner's insurance expert. She said, well, they should start coming down, and we've seen them come down of late, but we need to stop having all these natural disasters. Well, we have no control over that, but that is some positive news, and really the effects of California Southern California remain to be seen. But really, this is kind of boding well for buyers, not so well for sellers who bought, certainly 2 years ago. All right, let's look at closed sales. All right, we had a drop in closed sales for both condos and single-family homes. Condos really haven't been this low since January of 2024. Again, we had really high interest rates back in January. The drop in closed sales, it's normal for this time of the year, and just higher interest rates. So you're just not seeing as much movement in homes coming off the market. Median sales price, though, hey, steady pace wins the race, people. Look at this. Short-term home ownership, again, it's very risky if you're looking to see these huge gains in real estate. That's not normal. 5 to 6% is pretty normal. So if you're owning a home and you expect to own the home for less than 2 years, that's a very risky proposition because there's no guarantee that interest rates will come down and that the home prices will come up. But I will tell you this, all right, the elevator, throughout this high interest rate period, the elevator has stayed at this level. Single family homes, you're looking at right around 1.1 million. Condos right now about 540,000. So the steadiness of our housing market in Honolulu is so strong. You don't see this everywhere else on the mainland, but you see it here because there is such a lack of supply. Value of home ownership is there. You look at the difference in the net worth of people who own homes versus lifelong renters. It's night and day. And here's the other thing, folks. As soon as interest rates come down, expect these home median sales prices to go up. Expect them to go up. Single family homes, that's a no-brainer, man. If you can afford a single family home, get into one. There's still single family homes under $1 million, all right? But the median sales price is certainly 1.1. It's over $1 million. I talked to Trump, figure it out. Last time Trump was president, man, he was like bashing Fed Chair Powell, telling him, to lower the Fed funds rate. And there was a whole other issue then, but he was fighting them. Well, this time around, his new Treasury Secretary basically spoke on the circuit this week and was saying, you know what, we're not going to focus on the Fed funds rate. We're not going to get in the way of the Fed doing their job, but we are going to focus instead on the 10-year Treasury. Well, how do you do that? How do you do that? Because the 10-year Treasury is controlled by the market. Well, you remove wasteful spending for one. All right, we have a huge budget deficit. Well, you remove this wasteful spending, you lower energy prices, and you boost overall economic growth. And those three things, if you could do that, then there's a good chance you'll see the 10-year Treasury come down and let the Fed take care of their business, right? The Fed's dual mandate, lower inflation, steady employment. They're going to do that. But I will tell you this, we got to talk to each other. They can't work and pull opposite ends. They got to work together. They got to communicate with each other. They don't have to unduly influence each other, but they have to, I think, for the health of our economy, they have to walk, not hand in hand, but walk lockstep together, really keep our economy moving, to lower inflation and to lower the long-term rates. But President Trump is focused on the right thing, and that is long-term interest rates. Super, super important that he do that. Let the Fed do their job. And you know what? If they're working together, there's really not much they can do. So let's take a look at this 10-year Treasury. All right, since January 20th, we have had a slow but steady drop in the 10-year Treasury rate. All right, right now, if you look at this, we are just under the 50-day moving average, right around 4.5, just under 4.5. Next week, we have two big inflation reports coming out. There's a lot of room right now beneath the that 50-day moving average before we hit a dual floor at the basically at the 100-day and the 200-day moving averages. If we get really solid inflation reports, we could push below that 100-day and 200-day moving average, and then you see a lot of room for the 10-year Treasury to come down, and on top of that, mortgage rates to come down. So big week next week. I say it every week. I know, guys. But it is a big week next week with regards to the inflation reports. And we get positive inflation reports, we could see that 10-year Treasury go down. But right now, we got a couple good ceilings as well. We got the 50-day, the 25-day moving average, and we got a Fibonacci line at the 4.6. So really kind of good ceilings keeping us in this range. Despite the BLS jobs report not being really that great today, we're seeing 10-year Treasuries not going so hot. Now let's look at the initial jobless claims. Initial jobless claims up 11,000 to 219,000 last week, and continuing claims up 36,000 to 1.886 million. So again, we do need to see those numbers continue to go up. Not because we want people out of jobs, but just part of the economy. And who knows how that's going to happen over the course of the next several months. All right, let's look at VA rates. You know, jobs week was not enough to really move the needle. I said before, we're going to stay right around the 6.5% range unless we get some really good job news. We did get a little bit of good job news. We saw interest rates come down after the JOLTS report, really just kind of trying to stay near that 6.5% line. We need to see some good inflation numbers next week in the CPI and the PPI so that we see interest rates start to go down. All right, so what does this mean for everybody? Well, hey, mortgage apps were down last week 4%. For purchases, refinances are actually up 7% last week. There's a huge inventory. Just went over a huge inventory level of homes in Oahu, Honolulu County, and, you know, with the exception, of course, of Mililani and Kailua and Kaneohe. But for buyers right now, there's a lot of opportunity to, get seller credits to help you make that home payment affordable. And I do this every day. I talk to clients and I show them the numbers, what they can do with seller credits to make home purchasing affordable in the short term while they wait for interest rates to come down in the long term. Really, I think those who are waiting for the PCS season, the April, May, June, I think they're going to be fighting a lot more competition. There isn't as much competition right now. I do believe now is the best time to buy. I do think that will change once we get into the PCS, the end of the school year season. Sellers, again, if I was a seller and I didn't have to put my home on the market, I wouldn't put my home on the market until March, April timeframe. That's just me. All right. I'm not selling anything because I'm just letting my homes appreciate. That's what they do over time. I have that long-term mindset. All right. And I think you should too. That's all I got for you guys. Have a great week. And it's always a pleasure. If you have any questions, please comment, like, subscribe, send them to me, DM me. I'm always here to answer your questions. I love doing that. I love educating. And I'm waiting for them to come in. All right. Have a great week. Aloha.